Hello, everyone on YouTube. Thank you for tuning in to the Ask Me Anything of today, which is October 20th. We just finished tax season, and I didn't do an AMA last week, so I have a ton of questions to get into. If you are new to the channel, you've never heard of me, my name is James Baker, and I am a CPA based in between Miami and Houston, and basically internationally. I travel all over the world, visiting clients, presenting, and talking about international taxation. And I help many clients get set up in the US and operate correctly so they don't need to pay US taxes, or find the best strategy to minimize your global tax while staying compliant with all of your requirements. So that's what I do. I'm a US tax expert, and I have this channel, and I have a Discord group, and which I have neglected a little bit. Discord's a little clunky for me. And I have this Telegram group, which you can join. They're free groups. I chip in and out. I come in and I comment on stuff and I answer some questions. And cool, we're live now. And I answer questions on there. And basically, I do these calls so that I can answer all the questions, because I don't answer every question every day. I'm not on call just answering those questions. I'm mostly working with clients on client work, but I do jump in and out and answer questions on there. So it's worth to join. It's free. It's worth it, right? Okay, so I'm going to get to some of the questions now. Well, we have a couple people here. Nice. So happy that you could join. I just did my intro, and I'm going to get to some of these questions that I have. Where are my questions? Put this one over here. Put my questions. Okay, here's my questions. Question 1. Okay. Question 1. I was in the USA earlier this year and applied for an ITIN just after opening my LLC. They declined the application because I did not meet any of the clauses at the time. They said I should only apply when I wanted to file a tax return. It is close to the end of the year. Should I apply now or wait until the first week of January when the tax information is complete? Would that give enough lead time for the process and give me the ITIN? Thoughts? Well, per my group and some of my associates, I've realized that you can actually file a blank tax return and request an ITIN with that tax filing. So you can file now on the 2021 forms and put 0 tax, and that way you won't have to pay any tax, and you also can get your ITIN faster. Because it has to be a paper filing anyways, because you're attaching the W-7 and a certified copy of your passport or a stamped passport from your certified acceptance agent. You can go ahead and submit it now, or you can wait until January and submit on the 2022 forms. I'm not sure which is faster, because the IRS is dreadfully slow no matter which option you choose. Okay, so I had this over here. So that's what I would recommend. You can submit it now, or you can submit in January. You probably are working with a certified acceptance agent. If you're doing it yourself, you need to attach a certified copy of your passport by the issuing agency, and that's to the form W-7. W-7 that is attached to the form 1040 NR, as assuming you're a non-resident. Question 2. I'm a Canadian with an individual LLC in Wyoming. I know I have to file the 5472 and 1120. Is there anything I'm missing? And do I have to file the W-8? So the W-8 is not something you file. It's something you give to people who request it from you. If someone is going to be paying you, a U.S. company specifically, and they want tax confirmation, they'll request a W-8 or W-9 from you, and you would give them a W-8 BEN. And this would mostly be your personal information. It might confuse them, but that's something you have to navigate through. That's officially what you should be giving them, because the LLC is a disregarded entity. It's like you're doing it yourself. So that's kind of what you would you be submitting there. Thank you. This video is sponsored by LaCroix, best bubble water in the business. Not sponsored by LaCroix. I think that answers the question. There's nothing else you need to file. I'm sorry for jumping around, Danny. There's nothing else you need to file here. You need to do your company renewal. You need to do your 5472 report with the IRS, and the W-8 is something that you would need there. So that's that's the answer to that question. Question number 3 says, thanks for answering my question. The Stripe non-U.S. resident question. I have a C Corp, not an LLC. Is it the same? Someone told me Stripe are considered income and I should pay taxes even if I don't have a location employees in the U.S. Can you confirm this? Great question. So the question is really, this question is what's the difference between a C corporation and an LLC? Many people who use Stripe Atlas to open their company get a C corporation, a corporation instead of a limited liability company, an LLC. They're two distinctly different types of companies. The C corporation does in fact pay taxes in the US on its profit. So if you open a C corporation and you invoice $400,000 and you just don't have any expenses and you leave it in your bank account, technically you should pay 21% income taxes on the totality of those sales, on your net income. If you have expenses against it, that's great. But it's basically if you start with an account that has $0 in it and you sell and you build up your account to how many X dollars is in it and you don't take any money out to pay yourself, that's what you're going to pay tax on, whatever's left in the bank account. That's why the LLC is generally a better option, especially for a foreign person, because you're not going to pay any U.S. taxes on that. Maybe you're a Mexican person and you don't want to pay taxes in Mexico, so you pay tax in the U.S. It's still a tricky situation because you're probably living and working in Mexico. But that's what some of my clients do. There's some instances when a corporation would be better, but it's generally not for the purposes of the people I'm working with. So what happens is, and I've talked to clients like this, you probably have to figure out how to close out the corporation and open an LLC instead, or potentially pay out all of your profits to yourself and consider them all expenses. That's a little bit riskier. The U.S. could pursue that and make you justify those expenses, or maybe say you should withhold taxes on those or do something. It's a little messier, but it can work. There's a lot of different ways to structure the transactions and the operations so that you're optimizing your income taxes in the U.S. and globally. But it's really situationally dependent on what your situation is. Question 4. This is great because I don't know the answer. Question 4, we have a how to fill form ST3 for someone who is a foreign reseller. So I'm going to search ST3. I'm actually going to see how I can share my screen here and see how I do this. So we can present, share screen, window, this window. Let's see, form ST3. Because I've never heard of this form. I'm not really sure what it is. Certificate of exemption. Oh, so this is a Minnesota form. It's a resale certificate for New Jersey, sales tax 3. So an ST3 form it depends what state you're dealing with. Okay, so South Carolina, Georgia, Iowa, New Jersey, Minnesota, they all have, okay, so you were looking at it. They all have their own ST3 form, which it looks like a resale certificate form, to be completed by purchaser and given to and retained by the seller. The seller should read and comply with the instructions. So PJP, whatever, Pennsylvania, maybe. Wholesale, it's all resale stuff. So let's go back to just me. Oh, wow. Stop screen. So back to my question. The question is how to fill it out for someone who's a foreign reseller. Yeah, I need more details on this one because the ST3 is different for every state. And generally, you're going to, if you're a reseller, you're going to apply for a resale certificate. And you're going to, once you get the certificate, give it to everyone who is, who you're buying from, so they don't withhold sales taxes on your purchases. And then you charge sales taxes to all of your clients because that's who actually should be paying the taxes there. All good. We have a good question from one of our live viewers. When you attend live, you get your questions answered on the spot. Thank you, Marlene. What is the best form for a flipping business where the owners are foreign persons? So the best form, and it sounds like the options really, it comes down to a single member LLC, a multi-member LLC, or a corporation. So it depends on your needs, and I'll tell you how it works in each situation. The benefits of using a single member LLC are that you get to pay long-term capital gains rates on your profits, assuming you hold the profits for longer than you hold the property for longer than a year. If you're flipping in shorter than a year, you're going to pay ordinary income tax rates, which go up to 37%. So if you're making a lot of money and you're reinvesting all of it into the business, a corporation in this instance may be better because you're going to only pay 21%. You can pay yourself management fees, service fees to get the money out of the company, but you're going to pay just a flat 21% plus, state applicable state taxes depending on where you're doing the flipping. If you are doing less flips, if you're doing like one longer term flip, or you're doing just buy and hold, it might be easier with just a single member LLC. In that case, you would file a 1040 NR and report your results in your personal tax return. The multi-member LLC is okay, but the problem with that is it's a little more complex. When you have a multi-member LLC and you have U.S. trade or business, like you would when you're flipping U.S. real estate, you are still going to end up paying taxes at ordinary income rates personally. However, you have to file a 1065, a partnership return, and you have to file Form 8804 and Form 8805 so that you because you'd be required to withhold taxes based on the profits of those endeavors. So if your partnership has if your flipping gain is $100,000 and it's two foreign partners, technically you're going to have to withhold $37,000 of taxes on behalf of those partners and file those forms, and then those partners report their gains and calculate the tax on their $50,000 each, and they each have 37,000 divided by 2, whatever that $17,000 of taxes withheld, and 16,000, that's 30, 14, 14.5 of taxes withheld. 20, 30, holy crap, guys, I'm so sorry. It'd be 37,000, divided by 2. Yeah, $18,500 of withholdings, and you request a refund on the personal filing. So it's an extra step. But if you have partners, it is what it is. And you might pay higher than the 21%, but you can take your money out right away. So there's different ways to do it. A corporation is not bad if you're going to invest like $4 million and have a huge flipping business. A corporation might be best. And each property you buy and flip should be held in a separate LLC under the corporation. But there's a lot of different ways to do a flipping business. But it depends on the scale and the scope and all of that stuff. So it depends on a lot of different factors. So I hope that answers your question a little bit on what the best way to manage a flipping business, assuming you're flipping U.S. properties and you're foreign persons. There's different ways to do it. No way is right. It all depends on your circumstances. What I would say is start as an LLC and buy that first property like that. You want to have each property tied into a different LLC owned by the top level LLC that's operating. And then at the end of the year, you can decide if you want to make a corporate tax election for it to pay tax as a corporation or leave it as an LLC. So I would start like that. Thanks for your question, Marlene. Next question from Christian says, can I apply for an I-10 without filling any tax? Oh, fun. Okay, it popped up there. I don't know if you did that, Danny. Can I apply for an I-10 without filling any tax in order to open a PayPal account after registering the LLC? Yes, you can file a tax return with a W-7 and request the I-10 without having to pay any taxes. But you need to wait till you get the I-10 to do the PayPal stuff. You can open the PayPal account and start using it, but generally they're going to ask for this number. I just opened a PayPal account for a client Actually, no, they actually asked for it. I did it for a client yesterday, a multi-member LLC, and we had to put his social security number or his tax ID in there, and we entered it in on the application. So you kind of need it for the application for a U.S. PayPal account. And something very important, Christian, is that you need to do it from within the U.S. They have very good sensors. So if you apply from outside the U.S., they're not even going to let you apply for a U.S. account. So you need to. What we do with our clients is I'll get on a call with them while I'm here in the U.S. and I'll do it on my computer. So generally you can apply for the I-10 without paying any taxes. This is fun. So this is the next question. Hi, James. I offer a service through my corp. If I want to start selling a product through Shopify, I know I need to register the sales taxes. But when e-filing, do I add all the income from the service as exempt or just the product sales? The product sales will be under the legal entity, but I'm using a different name than the service. I'm not sure if I'm explaining myself. Well, maybe it's kind of confusing. Sorry, I'm just having fun sharing the snippet there. So I was just playing with that. I wasn't even thinking about it. Let me read it again to myself. I know I need to register the sales when e-filing. So when you are doing if you're selling through Shopify and you register for sales taxes, you need to charge sales taxes on the products that you buy, that you sell. I don't know what you mean by exempt. So if you register for sales taxes in Florida and you are selling to people who live in Florida, you should charge 7% on those sales and then remit that and pay that to Florida when you file your returns, especially if you're selling on Shopify. So that's how you calculate it and actually pay your sales taxes. So that's the way to do it for sure. You're welcome, Marlene. Let me go back to the slides now. I think we answered a couple of those questions. And remember, guys, after I do this call, I'm going to do a call and I'm going to do the same thing in Spanish. So if you prefer to have your questions answered in Spanish, as it looks like most people have names where I could guess you maybe speak Spanish too. If that's more helpful, I'm doing a Spanish one after this one. Okay, we have one more question that's got here before I got back to the slides. Hi, James. I want to start selling web design service in Europe, US. So I need to register a single member LLC, get my EIN, virtual address, US number. I'm good to start using US Stripe. Yeah. I mean, you can apply for Stripe. You need the LLC and the EIN number. I don't know if the virtual addresses work, and I don't even know if you need a US phone number, but yeah, that's what you need to apply for Stripe. Stripe accounts are great. I'm going to start making more videos about applying for Stripe, how to use Stripe, best practices when applying for Stripe, and as well as other payment processors, because there are other options, but none as easy as Stripe. As someone who's applied for I'm over 15 different payment processors myself and used like 6 different ones. Stripe is easily the best. It's just so easy to use. The rates are competitive and it integrates with everything. The application's fast. You can have multiple accounts. Stripe is far and away the best, and I use them for almost all of my businesses, in addition to other processors as well. I like to have options because the game is all about options. Being able to, if one gets shut down, because Stripe has shut down accounts for me before, like everyone does. I get all my accounts. I push it to get everything shut down, to know to understand it a little bit better. I don't try and do it, but it just happens. But yeah, I would definitely use Stripe. That's the summary there. Question number 5. Back to the organized questions. If I closed my C corp and open an LLC, what will happen for the taxes I owed on my closed C corp if I'm willing to not pay and close it? So I think this guy messaged me and he said he sold like 40. Let's say he sold $50,000 in Stripe over the year. He kept it on his account and he has a C corp and he's now realizing he should pay taxes on that for 2021. He's like, what do I don't want to pay these taxes. I should have gotten LLC. My bad. What should I do? And I'm going to give you my non-professional advice here. Like, this isn't professional advice. This is obviously speculation, but I guess you have 3 different options, right or wrong. The right option is to pay your taxes, report the income, pay your taxes, close the company, and do liquidating distributions. Great. You could also file the return and just not ever pay the taxes, and the IRS is going to try and go after the company, which you're going to close. They're not really going to. They're not. I don't know how they're going to get it. I have clients who've owed money to the IRS and who have tried to follow up there and tried to like the IRS tries to get the money, but they're really getting it from the company. They're not getting it from you personally. So if you close the company, it's hard for them to get it, but it's still going to linger. The other option is to, and probably better option than the second one, is to just file the tax return as final, report total income, total sales as they were, and then the expenses equal to the sales, so there's no income, and then file a final return like that. And yeah, sure, if the IRS investigates you, it's the same as option 3, but that's only if they actually check and look into it. So if you're not going to pay your taxes, I mean, those are your 3 options. You have option 1, pay your taxes. Option 2, file it correctly, don't pay your taxes. Option 3, file it incorrectly, so there's no income and don't pay your taxes. So those are your 3 options. Probably option 3 is better than option 2. Option 1 is the technical way you should do it from the CPA. That's what you should do. You should pay your taxes. I'm not gonna. I've been discovering that there's a lot of different groups of people out there that pride themselves on helping people avoid taxes and like not pay taxes and hide money from the government. And I'm going to make more videos about that too, because I don't want to be known for that. I want to be known for smart planning and efficient organization, so you don't have to live in fear of the government and hide your money all the time and be all over the place. Pay your accurate share of taxes, and if you don't have to pay or structure your lifestyle so you don't have to pay taxes, but don't just live in a way where you're like cheating the government. And I'll go into that in other videos. Great question. Do you have some video about stocks and debt basis for S corps? So this is going to be called how to calculate debt basis for S corps. And I'm actually going to share my screen and get a little Excel document up. Give me a second. Let me pop up an Excel and I'll do this for my Americans who have S corps or partnerships. It's the same thing. When you're, especially as an American, it's more important to do it the right way. Let me go to my drive, new folder. No, I'm going to do a new cancel. New sheet. I'll call this. Okay, cool. I'm going to put this over here. S corp basis calculation. So I'm going to do it from scratch, and I'm going to explain how the basis calculations work for S corps. So let me present my screen. Okay, I'm going to do my window. This window. So you can see the basis calculation. So basis is calculated like this, and you can see it on. Actually, I'm going to pop this up too. Form K1. So if you look at a K1, they have the basis section at the bottom of the form, which actually makes it a little easier. And we'll do it like this first. Okay, right here. There you go. So actually, this is an easier way to look at it. Partners capital account analysis, the basis. So this is comes from prior year ending. Comes from prior year ending. Capital contributed is money you put in. So if you put in money, it increases your basis. So if you put in $5,000, it increases your basis. For prior year, for beginning account, let's just say it's 0. You have a new company. You put in $5,000. The business loses $3,000. And up here, you're going to see up here a ordinary business loss of $3,000. Great, right? Ordinary business loss of $3,000, and we'll do it like they say in parentheses instead of a negative. Some show it negatives. Other decrease or increase is going to be if there's like debts that are canceled or other like tax exempt income. Like if you have tax exempt or non-deductible expenses or something, if you have tax exempt interest, it's not really income, but it affects the basis. It's not as common, to be honest, and it's calculated generally by the software, but it's not going to really affect most people. So I'm going to leave that as 0. And then the withdrawals and distributions are pretty obvious. Like if you took money out. So if you took out, and this is already bracketed. So let's say we took out $1,000 here. So you put in 5,000, you lost 3, and you took out 1. And this is how you calculate the basis. The basis now is, what is this? 5 minus 3 is 2, minus 1 is 1,000. It's the basis, right? So it's really 5 minus the loss minus the distribution. And what happens is if you have no basis and you have a loss, you can't claim the loss until you have basis. And that happens generally when you have loans. So if your business has a loan and you lose more money than you've actually contributed to the company, then you cannot take that loss until you contribute more money or have income against it. Because if we switch it around and let's say your capital contributed is 5, your current year income is 5,000, and your withdrawals are 11,000. Now your basis is going to be negative 1,000, and that extra distribution is going to be income. Well, it's going to be negative 1,000. I don't think you can have a negative basis like this, but it would be that would be actually extra income to you because you took out excessive basis. So there's a couple little tweaks to it. When you take out more than you have basis for, it's income. When you have losses in excess of your basis, basically when ending capital account is 0, you can't take the losses. You can't claim them and they carry forward. You can take them next year against profits. So if next year you have, let's say this is the same instance, and we have 0 contributed, you have 5,000 of income, the withdrawals are 0, and the ending capital account is going to be 5,000. But what happens is if you have a carry forward loss of 1,000 or 2,000, you can use it against this 5,000. So that's just a brief explanation of how the basis stuff works. That's a basic understanding of how it works, and it really matters mostly for S corp owners and for Americans, S corps and partnership owners. Rafut, ask away. I'll try and get to your questions. Great question. Mr. Peter says, I provide services through my LLC. I want to invest some of it in the stocks and make other investments. What will I pay taxes for? Will I have to pay taxes on those investments? So if you are providing services with your LLC from outside the U.S., you don't have to pay taxes on your profits. And for non-residents who are investing in the stock market in the U.S., your stock gains and losses from the purchase and sale of stocks are not subject to income taxes. And I think it's in code section 871 or something. I have to review which one it is. I have a couple of videos on the tube about it already, but it explicitly states in the code that you don't have to pay taxes on your capital gains. However, if you're a non-resident and you're investing in dividend stocks, any brokerage is going to withhold 30% on those dividend stock withholdings on those dividends that you receive. So if you get $10,000 of dividends, you're only going to get 7,000 of it, and they're going to withhold the other 30%. If you're from a treaty country, then you can give a W8BEN with a treaty position on there and reduce the withholding rate to potentially 15%, depending on what country you're from. So most people who are non-residents investing in the stock market aren't doing heavy dividend stock investments because there's withholding on those, and there's no withholding on mutual funds and on ETFs and on stocks that don't issue dividends. Or if you buy and sell before the dividend dates and don't get the dividends and you just make the capital gains instead, that's a different way to manage it without paying too much taxes. So good question, Pitar. How are we doing on time? Okay, it's 30 minutes in. Perfect. James, can I use Spanish PayPal business account as a freelancer for my LLC, or would it be considered mixing funds personal with business since the account would be in my name? This is not ideal to use a PayPal account in your business name. You can consider it for your LLC. Will the country of Spain be in agreement with this? I don't know. From a U.S. perspective, kind of doesn't matter as much because you're not paying taxes on the results of this LLC anyways. So you can definitely do that. The commingling of funds doesn't matter as much for LLCs like it does for corporations. So from the US perspective, I don't think it's a problem, but from a Spain perspective, I don't know how PayPal is sharing details of Spain, and it also depends on your scale. If it's a couple $1,000s a month, it's probably not a problem. If you're doing 200 grand a month, then yeah, we need to find a good solution for you. I'm gonna skip this sweater for a second. It's cold in Texas. That's where I'm at right now, and it's been cold, so I've been sweatering up. Let's see where we're at. Oops. Okay, next question. Question 8. PayPal, more PayPal questions. PayPal accepts the ITIN instead of the SSN, but requires many more things to verify that you reside in the US, such as a credit card or a driver's license, a lease, a telephone line in your name, etc. Is there a way to open a US account, PayPal account easily? And the answer is not really. I mean, PayPal is the worst. They hold people's money all the time. People like to, if you're doing e-com, it's tough not to have a PayPal because so many people, even me included, I use PayPal when I'm buying. It's convenient, and they're super customer centered. So if I am a customer and I complain to PayPal, they're going to trust me over the seller and hold the money until you can verify that you delivered the service. And they're really not that friendly to the businesses as they are to the consumers, which is, I get that. But no, I don't have any secrets. If I did, I'd let you know. But there's really no secret. Getting the ITIN and giving them all the information they need is the way to do it. Probably finding an address and getting a phone number on that address would be the way to do it. That's probably the way to do it. Question number 9. I'm from the US, have a US business, but operate outside the US. How can I hire employees in the US and outside the US? Great question. So if you are a US citizen or green card holder and you are living outside of the US, any employees, any people that you hire outside the US are going to be considered contractors. They can't really be employees in the traditional sense of the word. What is an employee? And also, you need to be careful of where you're operating. If you operate a U.S. business in a country like Germany, for example, they will want you to register your company in the country where you're operating, depending on where you're operating, and depending on, especially if you have an office and employees out there. This is a loaded question because there's a lot of factors that you're not really sharing, and this could be a quite complicated planning situation. But generally, if you're operating locally in a local country, you would open a company there to deal with the local operations, and then you can also operate with a U.S. company as well. It's very particular in how you file your taxes as a U.S. citizen living outside of the U.S., but there's a lot of solutions and ways that you can minimize your tax burden when doing it like this. If you are hiring U.S. employees, then they would be paid by your U.S. business, and it's important to use the distinction from the IRS website. What is the difference between a contractor and employee? It's more favorable for you to pay contractors, generally speaking, because you don't have to pay any of their self-employment taxes. And generally for them, it's more favorable as well because they can take all their expenses against their income, if they have any expenses at least. It's only if they have no expenses at all and they want to get paid as an employee is when it really matters. But if you have a factory and you have like 50 people there and you're paying them all as contractors and the IRS comes in one day, they're going to bankrupt you because they're going to make you pay back payroll taxes on all of the wages from the whole time. So you really need to look at what the people are doing and the role in your business to determine exactly how much, if they're employees or contractors. So there's a lot going on in this question. But that's how you hire employees. It's really determining if they're an employee or a contractor and where they're working and how they're working with you and which company they're going to get paid from. So that's how you do it. I need to turn this a little bit. Oh, sorry, you guys can still see me. That light was just straight in my eyes. Okay, so we have some real questions here. I have some more questions from the chat. Yes, you may, Robert. Thank you. Great question. Yes, you may. My man Rufat says, if I have an LLC in Delaware and I'm doing drop shipping and I don't have any warehouse or employees or anything, do I need to pay anything other than the franchise tax, which is $300 per year? If you're in Delaware, that is the franchise tax that you would have to pay. And that's the only thing it looks like you have to pay, potentially sales taxes. I don't know how you're operating your drop shipping, but if you're selling off your own website, you would have to potentially comply with sales tax laws all over, and potentially, yeah, sales taxes. But you shouldn't have to pay any. You shouldn't have to pay any income taxes, though. Sorry, bro. Sorry, sorry, Robert. Too late. Okay, well, I'm late on this question. Someone asked this question on the 12th. They said, I have a C Corp and the deadline of the tax extension is tomorrow, and I want to close and open an LLC. Do I have to file the tax return? I don't have intentions to pay the tax. If I file and then close it and I don't, what happens? Will this affect the new company if I owe taxes for the old one? No, they're going to be separate companies. They're not going to affect each other. And I kind of answered this question already. If you don't, there's 3 different ways to do this, right? So I'm not going to go into this one again. Okay, fun question. Hi, James. I have a question regarding paying taxes as a foreign-owned single-member LLC. I am receiving payment for services provided to companies in the U.S., but I am a non-U.S. citizen physically in Asia. Would I be required to issue a K-1 with profit and distribution myself and subsequently have that income subject to a 30% tax rate? If not, how would I file my taxes? What would my tax rate be? They should not withhold taxes on you, and you don't need to withhold taxes either. You just have to file your 5472, report your related party transactions, file your annual report for your LLC, and potentially pay taxes in your home country in Asia. Since you live and work out of a country in Asia, you're subject to those tax laws over the tax laws of the U.S. because the U.S. company, just having a U.S. company and a U.S. bank account doesn't constitute doing business in the U.S., so you don't have to pay tax in the U.S. on these results. So I'm happy to share the good news with you that there shouldn't be any 30% tax rate for you just for services. To follow up with my earlier question, which I don't know which earlier question this was, I was also physically present in the U.S. under an O1 visa for 179 days and 122. How would my income, it was an OPT visa, how would my income be taxed for the service provided while I was out of the U.S. be taxed? So the income you earned on the OPT is subject to tax in the U.S., and you probably got tax forms. And then we need to file a dual status tax return and break residency so that you don't have to pay taxes on your income earned after you left the U.S. So if you do it right, you shouldn't pay any taxes on that income. Give me 1 second. We have a question in the group here. Is it true that a Delaware LLC is more anonymous than New Mexico? Texas big. Let's check it out. Let's do it. Let's do some fun stuff. Let's present and let's look up some companies. Share screen, window. This window, share, schedule K1. Let's go to Delaware LLC, look up. See how anonymous an Delaware LLC is. Let's look for PepsiCo. You gave me something? Not a robot. Submit. Let's look for PepsiCo. There you go. So we look at all these Pepsi companies we got, right? PepsiCo Inc. We get PepsiCo Hong Kong, PepsiCo Golden Holdings, PepsiCo Global Real Estate. You can look up the companies, right? And these are LLCs. Let's look up this LLC, Pepsi Americas, and you can see here that it is the corporation trust company set them up with the address, and that's the registered agent information. It was incorporated in 1963. Not a statement of good standing. We can get additional information for a fee. You can read status. We can get the status or more detailed information, including current franchise tax assessment, current filing history, and more for a fee. So I don't know if you can see the directors of a corporation. You might be able to see who the directors are, but you can't. You have to pay, and you can't even see who the owner is. You can see who potentially the directors are. So that's kind of lame. Let's do Wyoming company search. So the same company in Wyoming. There's going to be Pepsi Americas Inc. Actually, let's look for an LLC. PepsiCo Hong Kong LLC. A corporation trust company. Beautiful. Same company. This was set up in 2010 for the Pepsi they sell in Hong Kong. I'm sure they have they have a huge tax team over at Pepsi. Let's look up a Wyoming company, but that's what you see here. You don't see anything about who the owner is. You can look up and see the history. Let's see. You want to just pay for it? Just see. Pay $20 to see. If you're requesting detailed, this application will not return actual images of the documents on record. The application will the 5 most recent filings, franchise tax assessment, total authorized shares, if applicable, and tax due. Officer and director names and addresses are maintained on the images of the annual reports and not available through this application. If you wish to order a copy of the annual report, so you can request the officer and the director names from the state of Delaware if you pay and you call and you really do the research there. Let's look up on Wyoming Pepsi. So Pepsi, what was we doing? We were doing PepsiCo Hong Kong or something. We were doing PepsiCo Hong Kong LLC. PepsiCo Hong. They're not registered here. They're a Delaware company. Let's just look up PepsiCo. Beverage Sales LLC. Fine. And they are in good standing. It is an LLC. Let's see. We got SW4CY4. It's active. It's current. You can see the mailing address, the principal office. And these are in New York. That's fine. The registered agent is CT Corporation, Corporate Trust Corporation System. Is not the same as this. This was the corporate trust company, a little different. And the history, and we can see the public notes and the parties. None are assigned. We can see this original report. Let's open this up and see what we got here. Mailing address. We have the person who submitted this. But we don't. It's complete. This seems more anonymous to me. You can't even see the directors on here. And this is actually a Delaware company, that's registered in Wyoming as well to do business here as well. Interestingly enough, New Mexico company search. And I hope this is helpful because I don't do this very often, but I wanted to spend some time and go through this and look up some companies and see what we can see here. This is not the right one. We want this. Oops. Sometimes these are busy and you have to do them a couple times. Then business is not what we want. Where's the Secretary of State's? New Mexico Secretary of State. Okay. This is crazy. They run ads on their website. Is this really right? SecretaryofStates.com? No. New Mexico Secretary of State company search. Okay, here we go. Yeah, still here. Yeah, Christian got me on a rabbit hole. This is helpful. Okay, yeah, cool. Let's see. I never look up New Mexico. I don't like New Mexico. They're really slow. PepsiCo. Let's look up PepsiCo. not a robot. Let's search it and see what we come up with here. PepsiCo beverage sales. This is a bottling of Albuquerque. Let's do PepsiCo beverage sales. And I think here you can see at least one of the directors' names. Maybe not. So this is a Delaware company. It's incorporated in Delaware. Maybe it's different when you incorporate here. Yeah, you have to have a manager, Megan Hurley and Lisa Halper. Jim Halper's sister. Okay, so you have to have managers on the New Mexico website. So your name is potentially going to be seen on New Mexico unless you have someone else to put as the manager. And you also need to pay for an address in New Mexico. I mean, that's just here, the physical address. So that's something that New Mexico, I think, is a little less private just because you have the manager names. And also, you don't have to do the annual report every year, but they charge a general sales tax and they have the names on there. And I think they're just slower in adapting to stuff. So there you go. That's the breakdown between the main three. What do you say? Delaware and New Mexico. Texas is good, but they're not anonymous either. So you have a lot of good options. 46 minutes. So I'm going to go through the rest of these questions on here, and then I got to jump onto my Tu Empresa en America page and answer some questions in Spanish. First, Rafael has like 8 more questions here. It's Rafael and Rufat. So, hey, James, I want to reformulate my question. If I offer a non-taxable service through my corp and I want to start selling a product through Shopify, I need to register for sales taxes? I mean, a service that's not subject to sales taxes. If you're selling a product, you need to register for sales taxes, especially if you need a resale certificate. And then, that's a good question. Every state has its own rules. I think generally you're going to, I think what I would do is put all of the sales that you had in Florida. And then if there's any for services, then you put them as exempt. I don't think you have to put all of your sales everywhere. I'm not really sure. I don't think it matters that much as long as you pay tax on the sales delivered into Florida. Great question here. So Rufat, if you are a non-US person, if you're a foreign person, you can't have an S corp. Only Americans can have S corps. So I'm assuming you're a foreign person. If you're a US person, then yeah, you can make it an S corp, sure. But then you have different stuff. You have to pay taxes and stuff. You wouldn't have an S corp. An S corp is not for US foreign persons. Can't have an S corp. An S corp can't be owned by a foreign person. How can I take profits from my LLC? Yes, it's as simple as transferring the profits to yourself. How can I take profits from my LLC? It's as simple as transferring the profits to yourself in your bank account. Whether you're an American or a foreign person, if you want to take money from your LLC, it's distributed. It's all taxable to you anyways, personally. If you're a foreign person, it's not taxable to you. But if you're a U.S. person, whether you take the money or not, you're still paying tax on it. So you can always take the money from your LLC. And there's no tax. It's a non-dividend distribution. It's a distribution like that. What exactly should you file? I don't know what's going on with you, Mr. Rufat. Good questions though. I'm gonna go back to the slides, and I think if you guys have any more questions here, ask them right now because I'm about to answer no, actually, I think I just answered the Rufat question on here. Yeah, I have it written on my slides. Here's a tough question I don't know the answer to. If my LLC is owned 100% by a U.S. individual at the start of the year, then it's owned 100% by a foreign IBC for 1 month, and then we revert back to it being owned by a U.S. individual, when is the Form 5472 due? That's a great question. I would probably say I don't know why you would even, I don't understand why you would even switch it to a foreign IBC for 1 month or who you told about it. If you didn't tell anyone about it, it kind of didn't happen, right? It's like if a tree falls in the woods and no one's there, did it even fall? Or who heard it? I don't know how I think that's the wrong expression. But but let's see. Technically, let's look at. I don't even know, to be honest with you. I don't know. Or I mean, my answer is that I would probably just file one for you at the end of the year, not file one for the foreign corp. That's probably what I would do, practically speaking. But let me see if I can get some instructions here that give me some light on what we should do. A corporation is 25% foreign owned if there's at least one direct or indirect shareholder at any time during the tax year. I think the company was always a single member of foreign owned, single member LLC, and I think you actually only file based on who the owner was at the end of the year. I don't think the IRS is going to really grind you down about this, and I honestly don't know the answer, and really tricky. Yeah, I don't know. I don't want to look that up right now. Too hard of a question for this free call. But I think I gave a good answer to the question. I would just file the one for you at the end of the year as if the foreign company never owned the LLC. That's how I would do it. Last question I'm going to answer right now from Mr. Omario, handsome picture, my friend. Hey, James, what if I was NRA making revenue but without the LLC? If you're just a foreign person making money on a U.S. bank account, there's nothing to disclose. The bank could potentially close your account if you're doing business on a personal account. They don't really like that. And you don't have the not the asset protection, the liability protection in case someone sues you. And you don't have the privacy either. And it doesn't look as professional as being with an LLC, but there's nothing to file. So that's a pro. Nothing to file, particularly in the US, that I can think of. Okay. So thank you all for being here. It's been 52 minutes I've been live. I'm going to switch and go to the Tu Empresa en America channel to do my Spanish Q&A call. If you have more questions or if you want me to answer the same questions in Spanish, I will see you on that call. And I appreciate you all for being here and asking your questions. I hope this was helpful, and I will see you guys all next week, around this time next week. Sorry I missed last week. Okay, appreciate you all, and I will see you all later. See you on the Tu Empresa en America channel. YouTube me, show up, leave me a like and a thumbs up, and appreciate it. Okay, see ya.